It's all happening. The Senate Banking Committee is finally marking up the Clarity Act this Thursday at 10:30 a.m. Eastern Standard Time, and polymarket odds have soared to over 60% that the Clarity Act gets signed into law in 2026. That's not the only story we've got. I'm going to save the rest of those for you right now. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of All Streets. We're going to spend the next 15 minutes just jamming on the news, and there is so much of it to talk about right now. If you blink, you might miss a story that years ago would have sent the market up 10, 15, 20%, and now just gets completely forgotten. What a world we're living in at the moment. And the biggest story, obviously, of the day that everybody's been tracking here for months is updates on the Clarity Act. Now, as I mentioned there in the intro, we're getting a markup at 10:30 a.m. Eastern Standard Time. Now, if you're of my generation, a kid of the 80s, then there's one person who very specifically taught you about the legislative process. It's this guy. Schoolhouse Rocks. I'm just a bill. Yes, I'm only a bill. You know? He says it's a long, long journey to the Capitol City. A long, long wait when you're sitting in committee. We're sitting in committee. I can finally say that I've learned something from Schoolhouse Rocks. And yes, here we are sitting in committee with a markup. Senate Banking Committee will do this on Thursday, as I said. Now, interestingly, there's a hell of a process to get the Clarity Act done, and more so than most legislation that comes through the Senate. And I'm going to tell you why right now. So because of the complexity of this structure, we have multiple committees in the Senate that each have to come to consensus on the Clarity Act. We had the Senate Agriculture Committee. Seems strange that agriculture would have to do with finance, but the Agriculture Committee oversees commodities and derivatives and the CFTC. They already did their markup in January, passed, and have been sitting on the sidelines wondering what the hell's going on with their friends at the Senate Banking Committee. Now, the Senate Banking Committee almost went to markup recently, but then we saw that bald, beautiful, badass Brian Armstrong, so alliterative. We saw him come in and say no bill is better than a bad bill and basically killed that markup, which is what we're happening now. We're going into that markup. But even if we get a Senate banking markup now where they vote on the amendments within the committee, if that passes, which is far from certain, then we have to have the Senate Agriculture Committee merge with the Senate Banking Committee. They have to come together and come up with a bill that both of them agree on, which seems very complicated to me. And then it can go to the floor of the Senate where it needs 60 votes to pass, and then head to the House where they also have to vote on this and agree on it, and then obviously head to the president's desk. A lot of moving parts here and a lot that still has to happen for this to pass. Of course, for it to pass the Senate with 60 votes, that requires 7 Democrats to get on board. And as I've told you in the past, that is far from certain. Probably you could bet against that, considering we have not yet litigated the ethics clause that would prevent the Trump family and others from participating in crypto markets. That's not the only impediment to this getting done. Now, remember, I told you we were going to markup because we had the agreement between Tillis and Alsobrooks, which was a bipartisan agreement, and an agreement between the crypto industry and the banks on yield from stablecoins, basically killing yield and only allowing rewards. The banks are freaking out. This is from Bernie Moreno, who is a senator on the Senate Banking Committee. The banking cartel is in full panic mode. While Americans were celebrating Mother's Day with their families, the CEOs of the American Bankers Association sent a frantic alert to every bank CEO in the country demanding immediate engagement to lobby senators and kill stablecoins that would finally let everyday Americans earn real yields on their own money. Nothing says democracy like calling up the most powerful CEOs on the planet to call their senators and kill a bill that is universally desired by the American people, and to make sure that they cannot earn yield on their passive holdings so that the banks can earn that yield instead of those people. That's what's happening here. The banks are protecting their interest because you deposit money and get 1% or less on that money, and the bank makes the 4 or 5% and then rehypothecates your funds and does it again and does it again and does it again with no reserves. And then when you run to the bank to get your money out, you can't, and they get a bailout. Tale as old as time. Beauty and the Beast. You didn't know that. Yeah, and so they had apparently come to consensus on this and agreed on it, and now the banks don't think it goes far enough. They're worried about deposit flight and are concerned about their underlying business. So right now, if you're taking the poly market bet, if you're taking the ball, I have it right here. Clarity Act signed into law in 2026, currently at 63%. It was over 70% earlier today, but before this agreement was down in the 40s. You are betting that one of the most powerful lobbies on the planet, aka the banking lobby, is unable to influence or turn enough senators to prevent this from being passed, 7 of which are Democrats that have to come on board. I still think that this is almost a free money bet. Also, the timeline is very tight. This has to get done soon. But man, I would love to see a sensible Clarity Act get passed and done. I'm just pessimistic that politicians can actually do this. But it's going to be interesting. We will report on the markup, obviously, after it happens on Thursday and let you know what's going on there. Meanwhile, the market is actually reacting, if you believe the narrative, to the likelihood of the Clarity Act passing. We've got this story right here on the Yahoo Finance Crypto Hub. Check it out. Crypto funds add $858 million as Clarity Act drives market optimism. So the story here, obviously, is we're always tracking inflows and outflows into Bitcoin spot ETFs and other crypto-related products. This is writ large across exchange-traded products across the world, not just into our ETFs, although we know that this is very heavily driven by the BlackRock Bitcoin spot ETF. This is 6 weeks in a row where we had inflows for the week. That is a very, very big number considering that we were reporting on outflows just 7 or 8 weeks ago, and it was basically flat on the year. Now we have the total crypto ETP AUM passing $160 billion, which is the highest since February. Now, I don't really buy the narrative that this is because of optimism around the Clarity Act. I think most people still handicapping this at best at a 50-50. And last I checked, we did not have this agreement on stablecoins 6 weeks ago, and we've seen 6 weeks of steady inflows. Now, of course, there are outflow days within there, but by the end of the week, we're seeing net inflows each of those weeks. We could have the chicken-egg debate probably until the end of time as to whether price going up leads these inflows or if these inflows lead price going up. I think these inflows are a result largely of retail buying ETFs because they see the price going up and get excited and they buy it. That's how markets work. People love to trade on momentum and to buy on momentum. And now that we have Bitcoin trading near $82,000 and having come off a low of 60, I mean, that's a huge, huge move. I'm not surprised that we're seeing net inflows following that. I do not personally believe that it is because of optimism around the Clarity Act. But honestly, man, you can sell whatever narrative you want if it helps my coins go up. We're not having fun staying poor in the crypto industry, as we like to say. We want everything to finally go up. Now, the next story, or series of stories, I would say, is huge and really shows you the battle we have between the crypto incumbents and Wall Street that is brewing. Now, I've reported in the past on the fact that we have a lot of stablecoins building on Solana and Ethereum, and some of the biggest institutions are choosing the existing blockchains. But perhaps the counter to that narrative is this right here. Circle raises $222 million from BlackRock, Apollo, and others, an ARC token presale valued at $3 billion. Now, if you have not been following the story, Circle many months ago announced that they were going to have their own blockchain purpose-fit for institutional stablecoins. Perfectly good idea. See no argument against it, right? There's Tempo on Stripe, and there's other stablecoin chains that are being built and are purpose-fit. Now, what's really interesting here, of course, is now you have a choice if you're an institution. Many of them will choose both, but whether you choose to go onto one of these, blockchains that are being purpose-built for Wall Street, or one of the existing ones. Now, the numbers on this and the utility of the token, I find really, really interesting. So as I said, they raised $222 million. BlackRock, Apollo, ICE, Standard Chartered, Janus Henderson, Marshall Wace, Bullish. I mean, the biggest names in Wall Street, all, of course, led by Andreessen Horowitz. They sold a lot of tokens here to do this deal. I believe 740 million tokens at 30 cents. The total is going to be 10 billion, so that's 7.4% of the tokens. We don't know the vesting schedule yet. Now, as far as governance of the network, Circle will keep 25%. 60% goes to the ecosystem, 15% will remain in reserve. Now you ask, what is this token for? Because we've had a lot of questions as to whether tokens are needed. Layer ones need tokens for gas fees, generally, or do they? Because in the case of ARK, gas fees will not be paid in the ARK token, which is usually where the value is derived. They will be paid in USDC, the stablecoin that is issued by ARK. So it leaves you wondering, what is the purpose of the ARK token and why are all of these companies investing in it? It's for governance, staking, security of the network. But if you're Ethereum or Solana, Solana do all of those things. They earn you a yield on staking, but are also used as the gas fees, which, much like the gas in your car, means that every time there's a transaction, you have to use Ethereum or Solana. That's always been the argument for these being commodities rather than securities. So it's a really interesting situation. In the past, we've had ICOs and pre-sales, and we've seen that when they launch in previous markets, tokens can go up 1,000, 2,000, 3,000x from the price. I'm betting that BlackRock and Apollo and all of them believe that they can make a lot of money on this. The other side is that at 25% of the network, now with a $3 billion valuation, Circle gets an item worth $750 million on their balance sheet, and they spent effectively nothing to do it. That is some very interesting and powerful math on their behalf. And then if you dig deeper into the disclosures, you also have the fact that unless Circle reaches certain benchmarks in building this, BlackRock, Apollo, and others can get their money back. Last time I checked, when we did ICOs for retail, there were no refunds if the company didn't deliver. So this is definitely a more mature and different version. And this is the first public company doing a pre-sale. So a lot of questions will remain as whether you want to be an equity holder in the underlying company like Circle, holding their publicly traded stock, or do you want to own the token that runs the network that is issued by that company? We're going to see a lot of push and pull around this. We have another story that echoes this. Canton Network Builder nears $300 million raise, led also by A16Z Crypto. Now, this is the other side. Canton Network has a token that's already worth $6 billion total, market cap. And they're raising $300 million on the other side for equity because they're not publicly traded. But once again, this is just another story about Wall Street finding creative ways to invest in the crypto industry. And then, of course, you can't talk about institutional adoption without, again, talking about BlackRock. BlackRock deepens tokenization push with new on-chain fund offerings. So obviously, they already have BUIDL, which is their tokenized treasuries, which is on Ethereum. That has $2.4 billion already in AUM. But what they're proposing here is, one, a daily reinvestment stablecoin reserve vehicle built to qualify as Genius Act eligible reserve asset. I told you about a very similar product from Morgan Stanley that was announced. This is basically BlackRock saying we will manage a fund that you can invest in that will be on blockchain rails, where we will manage the treasury and redemptions and printing of stablecoins. If you want to issue or launch a stablecoin, you come to BlackRock, they manage all the plumbing. Very, very interesting. The other one is on-chain shares for a $6.9 billion treasury money market fund. This is via Securitize as a transfer agent. So BlackRock clearly going far, far deeper right now into the industry and into tokenization. Larry Fink's been talking about this for years, and man, he is not stopping. Now I'm going to share one more story before we wrap up here. Kraken parent goes for the OCC charter in bid to become a federal crypto bank. This is the company Payward. They would not be the only one. Anchorage, who is, as I told you last week, has been behind basically every stablecoin issued because they have this charter. Kraken wants to become a federal crypto bank. They already have a state account in Wyoming, a skinny account giving them access to the Fed. But this would full on make them a bank that's able to issue stablecoins and do all the other things. Now, this goes back to that story about the banks panicking, right? If we have a battle between banks and the crypto industry for what we can and cannot do in crypto, what's the most logical path for crypto companies to become banks? And then they can fight with themselves. No, then they obviously won't have to have the fight because they will have all of the power that banks have and will be able to tokenize assets and utilize stable coins and pass on those yields and do all of the things that your bank should be trying to do instead of trying to block the yield that you should be earning from your deposits. Now, the Clarity Act, it's going to get marked up on Thursday. We'll see. Right? I have no high hopes. Let's call it high hopes, low expectations that this actually gets done. We're on a very tight timeline. And meanwhile, the battle between everybody and the stablecoins is heating up. That's all I got for you guys today. We'll see you tomorrow for the Daily Wolf. Peace.